Eid al-Etihad holidays here in the UAE. They're celebrating the UAE National Day and some other national holidays with that. And so we are back, and in our absence, nothing has changed. Now, oil prices have remained relatively timid, caught in that kind of 72 to 75 kind of ping pong on the oil price. I suppose everybody is waiting for Godot as the big OPEC decision to be made in the coming hours. But tomorrow, that was due on the 1st of December, now due on the 5th of December. And Brent crude oil trading at little change today, $73.85. Let's kick off with Ali Al-Riyami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals in Oman, who's known to have loitered on the streets of Vienna waiting for the next OPEC meeting that never came. And it looks like this one isn't going to come either, at least not in person, Ali. But in either case, what should they do? Your thoughts on, if you have a memo to send to the energy minister of Saudi Arabia, who directs a lot of OPEC thinking, what would you be sending him in that memo today?
Well, thank you very much, Sean, and nice to be back. Actually, I think the decision of delaying to bring back the volumes, the 180,000 barrels per day, that was supposed to be 2 months ago, and then it was delayed for 1 month, and then another one month, and now I think we are already starting to see some indications that this decision also is going to be delayed this time. But I don't think that this time it will be only for 1 month. I think it is going to be longer than the previous 2 ones. I think this time, if I was to send any messages to my colleagues, my ex-colleagues in OPEC, I will definitely request them to delay the decision of bringing back these volumes to the market for another maybe first quarter of next year, up to the end of first quarter of next year. So at least for 3 months. Although that there are already discussion, I think also comparing between the 3 months, the first quarter, and also the other one is to delay it until the second quarter of next year. But I think that is going to be a very long delay. So I don't think that is going to be a good decision. The 3 months or the first quarter, at least this is going to give them more time to discuss, more time to follow the market, and also to read the market and see exactly what is there need to be done. But the situation, Sean, I think we will discuss today. The geopolitical, tensions are coming back from Lebanon, and also from now it is going even further to Syria, and God knows what will happen in Syria with the militias coming from different places. So it is going to be spread. I think it is going to spread maybe to a different level in the coming few weeks and few months. So inshallah khair, we say in Arabic.
Andy Lavin, Managing Director, Econs. Andy, looking at the oil price as introduced on my opening comments, sort of little changed in this bouncing around 72, 74 range. How much of that price do you think has priced in an OPEC decision? What do you think that price reflects in the expectation of what the market has for what OPEC Plus will do tomorrow?
So I think in terms of the core fundamental supply demand, which talks to the point you made, it's there, right? And I think that's why it's bouncing around the upper and lower level. The upper level is set by, is there really enough demand? And the lower level is set by how much are OPEC going to keep their cuts going? And I think, so most of it is actually already baked in. I mean, for me, I think the real challenge for OPEC is, if you look back, certainly over the last few years, they've struggled to keep up with balancing the market basis the supply and demand. And the higher oil prices have almost allowed the rest of the world that aren't constrained in the same way to actually invest and make investments in the upstream that brings on more supply. And then that leaves OPEC in the quandary they find themselves now, where actually if external supply is going up and the global demand is not going up, we've got to cut. Oh, we've got to cut. Whereas actually their role really is being able to quickly respond to increasing supply, quicker than the rest of the world production. And their problem is that the oil price has fundamentally gone too high for them to be effective.
The oil price has gone fundamentally too high for them to be effective.
So I go back
Explain that to me.
one of the historic statements by an old Saudi oil minister who's no longer with us, who made the comment that low oil price is OPEC's friend. Low oil price drives demand. Low oil price does not allow high cost producers to produce. So when you're sitting there with $70 oil and the rest of the world can start looking at all sorts of developments, you've immediately got competition they can't do anything about. And their quandary is they need the high oil prices because they haven't got themselves to a place yet where those countries can balance their budgets without a high oil price. So they are, I think, as one of the comments made, they are between a rock and a hard place.
And just to clarify on your earlier comment, you think the current oil price has priced in what exactly? That they will continue with the cuts?
Yes.
Do you have a sense of how much of a time period this?
Yeah, I tend to agree with the previous comments on your survey and also Ali, that it's probably going to be not real short term, so not a month, so 3 months me out into Q1. Anything more than that indicates a fundamental problem for them. Anything shorter than that just doesn't give them enough time to think about what are we going to do.
Well, let's go to the south of France, where our Turkish correspondent has decided that area of the Med must be nicer than his area of the Med. I'm not sure. But Mehmet Agucu, Group CEO, Global Resources Partnership Chairman at the London Energy Club. Mehmet, I have a few things I wanted to get your thoughts on today, and I obviously weigh in on the OPEC question. But firstly, I wanted to get your insights on all things happening in northern Syria, bordering into Turkey. There's a lot of chatter that Turkey's behind this latest push by the rebels, or if you like, the non-government actors, the Assad actors in northern Syria, taking over Aleppo, so on. I'd welcome your insights. How do you read this sort of what seems like out of nowhere, although this war has been going on like low level for 10 years plus now, but your thoughts on the latest developments in Syria?
Well, I mean, this was a surprise to all, actually. Nobody expected such a move towards the second largest city of Syria. And Turkey kept quiet in the beginning. And they said, we want stability, we want territorial integrity of Syria, and we don't want to be involved in what's happening. But clearly, Turkish strategic brain was behind what happened there, taking advantage of the Iran's weakening position, Hezbollah being seriously weakened, and Iran almost Israel made Iranian air defense collapse, and Russia is very busy in Ukraine. There was a strategic opportunity there, a gap to be filled. But I don't think that
for Turkey or for Israel. I mean, Israel has been bombing Iranian positions in Syria non-stop for the last 2 or 3 months. It hasn't been getting a lot of coverage because of the slaughter in Gaza and Lebanon, but they've been very active in destroying Iranian infrastructure in Syria.
This is what they did. What I'm trying to say, that there was a strategic brain behind that, very smart one, in Ankara, but it wasn't alone, Ankara, because without U.S. Endorsement, without Israeli collaboration, I don't think it could have happened. And the story is that it's not been confirmed yet, but the Mossad head was in Ankara just a day before the attack from Israel. And it has been, in my opinion, coordinated between the three. And Russia also didn't show a big reaction, although it seemed as if they were unheard of what was going to happen. They immediately,
potentially a big horse trading game going on here. We'll give you what you want in Ukraine. You back off from Syria, break the Iranian axis across the region. I mean, is that kind of the horse trading?
Definitely, there is a plot somehow organized between Blinken, Turkish Foreign Minister Hakan Fidan, supposed to be president perhaps after Erdogan, and he's very powerful in Ankara right now, with the Israelis and also Russians, because Russia has a vital interest there. It has their naval air bases protecting Assad, and also it comes 3 months after Erdogan proposed Assad to normalize relations, which Assad pushed aside. He didn't want to accept this before Turkish forces are withdrawn from Syria. So there is a very critical security element there for Turkey, because Turkey doesn't want the Syrian Kurds to establish their own autonomous regions, as US is pushing for and Israel pushing for. So there was a deal made, in my opinion, between Ankara, Tel Aviv, Washington, D.C., taking advantage of the position of Iran and Russia right now. Plus, Trump is coming on 20th of January, and his policy has been, in the past, withdrawal from Syria, and he was stopped last minute by CENTCOM commander there. Therefore, there is a very critical juncture in terms of geopolitical alignment and disalignments. And Israel has a long-term policy, we know all that, after October last year, pushing to Hamas and Hezbollah, then weakening Iran's position in any ways. And Netanyahu said, wait, what's going to happen? I think it was last week, what's going to happen in Syria? And this is happening now. And because Turkey probably joined that without any other option, because it was already more or less decided, either you will be there or you'll be out. So Turkey joined the scenario, in my opinion.
If you're not at the table, you're on the menu.
Exactly.
Let's come back to that. Ali, looking at the dynamics for OPEC Plus, decisions that they're making, is there any case to be had for that this is the time to proceed with returning the supply that has been kept off the market for a long time? The difficulty in keeping so many countries complying, behaving in alignment, that it's time to start moving towards the adding back, even at taking some hit on the oil price. Do you see any argument for that? Will there be anybody within OPEC Plus making that argument?
Many of them, Sean. I think with this, with this extra volumes from UAE, extra volumes from is it Kazakhstan? I think
Kazakhstan, Iraq,
yes, Iraq, extra volumes from Iraq. Libya is coming back. So many noise will be, in the table, or it will be heard this time in not only this time, but they have started already. I think some of them, they have already showing some concern on when are we going to be allowed to increase our production. So this is going to be a debate for future. I think more important for OPEC at the moment is two things. It's the stabilization of the market, supply and demand, and also the price to be more than 70. Otherwise, if it goes down to less than 70, and also there is no hope for stability, the market stability, then I think, these are the things that are going to worry other countries, basically. But at the moment, I think, the reliance is there, the unity is there, but the question is for how long? If they are going to continue delaying this decision, which is the right thing to do so, but for how long these countries that they have invested a lot, they will be willing to listen and to agree on this, delays. There will be a time that something has to be done, and there is no much, cards to be played in OPEC anymore. They have, they have played all the cards, and now there is little that they can do to affect the market, especially that the production from other countries is coming up, America and Brazil and Guyana. So everywhere they're producing more. So there will be some debates.
Would there be any consideration, because also what's due to happen on January 1st, we have the beginning of the OPEC cuts, the 2.2 million were to be unraveled, or at least start to be, but also the UAE was receiving an extra quota allotment from the 1st of January so that they would be able to increase their production quotas. Do you think that's also likely to be suspended, or what are your thoughts on that part of this jigsaw puzzle?
I don't think so. For this country, for UAE, I think the decision has already been taken, and their case was very strong, and it was agreed. So I don't think that UAE will accept to delay that decision. So it will go ahead. But I think this is already, it's been already in the numbers. It has already been taken, and the effect of that we have already seen in either in the price or also the crude that goes to the market or for exports. So I don't think that it will have any impact, but it is going to go ahead. My worry is for the other countries like Libya, like like Iraq and Kazakhstan. What are they going to request? Because also their production for Kazakhstan, as an example, is coming after 5 or 6 months from now. Iraq, they're already crying from few years ago, and their compliance is not very good. So it shows you that there is some unalignment in the OPEC arena. So they need to do something outside of the box to bring everybody back and also to please everybody, which is not something easy to do in this kind of situation. Well, the market is not really also a market is
Andy,
not. It's not it is not supporting them.
Andy, obviously the other part of this equation that OPEC is very focused on, obviously, as we all are trying to read the tea leaves on demand, but they will be very much also reading the tea leaves on the outlook for non-OPEC plus oil capacity increase. Trump coming back with a very strong fossil fuel agenda, Guyana and other countries continuing to add production. Your thoughts on where the majors are likely to go with adding capacity next year under a more sort of facilitating regime of regulation in the US?
So I don't think the regulations really have a major impact. It comes down to how much is it going to cost me to produce this oil? If it costs me more than I can sell it, I'm not going to do it. If it costs me a little bit less, I'm not going to do it. If it costs me sufficient that I can make a return, then I'm going to do it. It's the price that drives everything. Just because regulations make it more difficult, more easy, they don't really have a major impact in terms of the economics of the project. You may need to kind of give some incentives, but I don't see even Trump providing incentives. It's just going to make it much easier. And we've already seen through this year that what the major oil companies were doing, refocusing on cheaper supply. Guyana is a low-cost supply. I was just looking up at, as Ali was talking, Guyana is about $40 a barrel break even, right? So OPEC's quandary is, I want 70, but at 70, all these other people are producing. The only out of the box is, we've said stability. Well, stability at what price, right? And maybe stability at a lower price, held for a reasonable amount of time, is actually more stable for us as the long-term producers. And the argument goes, if the world does continue down this path of transition, then the last barrel of oil is going to come from OPEC. So let's not worry about these other people. It's all about our stability in the long term. And therefore, a period of relatively low prices, let's say $50, would transform the rest of the world production.
Interesting. Mehmet, I wanted to get your thoughts on where in this geopolitical picture you're painting our Saudi Arabia, Russia relations, given they are the sort of the main foundation of this OPEC plus agreement that is now 4.5 years. I mean, since the sort of COVID agreement in March, April 2020, they've held the world oil market very much in their hands in terms of its stability and balance. with all of the other geopolitics going on, how does that relationship look to you going forward into the return of Trump?
Well, I think everybody now eyeing what Trump will be doing. So whatever we hear now from different capitals, from Beijing, they just announced sweeping sanctions against exporting critical minerals to the United States in preparation for what Trump is threatening to do with the BRICS nations. He said clearly, if we have a BRICS currency or a trade bloc against US interests, we'll have 100% tariffs on all the countries trying to do this. And similar threats will come. Therefore, also, you remember the Trump policy in his first term, global energy dominance. This is how he termed it. And Trump is going to be very, very active, no matter what the prices will be, of course. I agree with our colleague, but it's going to be still the policy and regulation might drive some of the US companies to increase production. He's going to push further increase in production of fossil fuels. He's going to cut back on Inflation Clean Reduction Act, which is providing subsidies and incentives to renewable production in the US. And he might do what he did with the climate change agreement, Paris Agreement, pulling out. Whether he's going to do this or not, we don't know yet. But so there is going to be an effort to cut back efforts towards, reduce efforts towards renewables and climate change efforts, and pushing for fossil fuel production up. It's already the #1 in the world in terms of crude production, as you know, US. And so this is going to have dramatic implications in the market. We also mentioned Brazil, Guyana, and other non-OPEC countries are pushing for production.
Do you think in regards to that, I mean, those multiple dimensions, can OPEC have the bandwidth, the OPEC Plus, to think about all of those things, or do they simply need to manage the short-term outlook, 3 months? I mean, they did 2 months postponement of the unraveling of the cuts. Then they did 1 month. Now they're meeting again. I mean, these are incremental micromanagement of the immediate future as compared to the big issues, the big trends. Your expectation on this occasion, will they continue to just manage what's right in front of them rather than the big ideas?
Well, of course, their priority is to manage the short term right now. But I'm sure during the meeting between Mohammed bin Salman and the UAE leaders during his private visit, and they discussed this issue as well. And Russia and Saudi Arabia are countries where they always think in terms of chess game as well ahead of the time. And how they are going to reflect this to their fellow OPEC members is another issue. But clearly, long-term thinking is very, very important for OPEC, rather than focusing on the first quarter, second quarter cuts, whether they are going to be extended another 3 months. So if they see the big story coming, it's very clear to me how the big story is coming. And therefore, they have to take position. And they may not be able to influence the markets as they did in the past, unless there's a hard rock solidarity and unity among OPEC plus countries. Otherwise, US is going to be playing a more prominent role alongside other non-OPEC countries.
Well, it's certainly a very challenging thing at the best of times to move 20-odd countries in one direction. Never mind when you've got an outside actor or actors trying to pierce that group. Let's go to the survey question and kind of get a view from the room on the questioner asked earlier. The current oil price is priced in that OPEC will what? 1, proceed with supply increase, as they currently have announced that is the current policy until it's changed. Will they extend cuts again by 1 month, which is what they did on their previous decision, or will they extend cuts 3 months, as mentioned earlier by Ali and Andy? Which of those three do you think the current price at $73 has priced in which one of these? Because obviously the answer could be quite different. If the market's only priced in 1 month and they get 3, that could be quite bullish. If the market is priced in 3 and they only get 1, that could be quite bearish. So what has this market priced in at this current oil price? Ali, meanwhile, back at the ranch, so to speak, all of this sort of big picture analysis, but meanwhile, across the Gulf, bar Saudi Arabia, it looks to me like everybody is producing as much as they can. Everybody is investing heavily in new production capacity. So these two things can coexist, will continue to coexist. Your thoughts?
Well, I think you can't stop investing on the oil. It doesn't mean that you're investing for extra production, but you're investing to keep the plateau, like we do in Oman. So it is not.
Well, Kuwait just announced $30 billion to do more than the status quo. They want to get to 4 million by 2030.
Yes, it depends about the reserves. The more reserves you have, then the more investment you do, then the more production you have. But for majority of these countries, they have to do that because at one point you have to unwind this agreement and to allow other countries to come in and to go back to the reality and to know that there are other players out there that they are also fighting for the same market, and you have to accept that, like we did after many debates before, that the shale oil, it is there, and we cannot just keep on fighting it. So I think the future is that we have to admit, or the OPEC and OPEC Plus, they have to admit and to unwind this agreement and to allow the reality to take place, and then you start fresh from there. Maybe the price will be 40, let be it. But we cannot just fight unknown for forever.
It seems a little bit strange to keep spending billions of dollars just to keep it off the market. I mean, that the continuation of that policy does seem to be a little bit strained, especially when I put Andy Levin under the cosh with the easy question. Are we seeing anything out of China that might encourage OPEC Plus to stick with their plans of raising supply from January 1st and Kuwait to invest $30 more billion to add new spare capacity?
I think that is the only hope that OPEC has. And I don't see any signs of green shoots of recovery at this point. It's all covered in snow and wind. I think demand is the only thing that's going to save OPEC from a very tough decision in Q1. And that's really the reason why I would say it's 3 months. And that's because even if next month China said, oh yeah, it's good this month, could be bad the next month. There really are no signs anywhere else of where economic recovery is going to have a major impact other than China. And China at the moment is struggling.
And you got to also, I suppose, give a few months to see exactly the impact of Trump policies on shutting in Iran or not, or going after Russia or not. Mehmet, easy question for you to close us out. Is all of that? Are we seeing the last sort of hot embers of this 3 years of war in Europe and the Middle East? Everybody's exhausted. Everybody's running out of money. Trump is coming, and clearly he's kind of seems to be demanding or wants to see an end to it. Or your thoughts on where we're at on these, as we sort of articulated in your earlier comment, that there does appear to be interlocking sort of decision making. Russia, you back off Syria, you'll get what you want in Ukraine, etc. Are we in the end game here of these 3-year wars, or not? Your thoughts?
Well, I think the parties involved in these wars, before they reach their goals, of course, they are not going to give up easily just because of Trump wanting it. And however, Trump's team, transitional team, already started talking to Russians with Israelis, Turks. So there is a global mind, if I may say so, trying to resolve the things in such a way that it will satisfy all parties. But what will happen in Russia-Ukraine war, in my opinion, probably ending in the next 3 to 6 months, And because both Russia, Ukraine also want it has torn out these countries, is probably they are going to freeze the problem. So it's going to give away something on Crimea to Russia, although not recognizing officially the annexation, but a temporary solution like we had in Cyprus, perhaps, putting it on the shelf for a while and without bloodshed continuing. And it's going to be a problem between Ukraine and Russia, negotiating, discussing over the next decade, perhaps, but putting on hold on it so that things could start again. I expect this to happen in Ukraine. And in Middle East, it's quite difficult because there are so many parties involved in it. And it's clearly Israel and US driving it. And until they reach the goals, including on Iran, I don't think it's going to stop there. So we have to find one way or another to bring Iran to the table. And at what expense to Iran, whether it's going to be win-win or lose-win, and it has to be seen. And Turkey, of course, is the key actor in the Middle East, and also perhaps in Russia-Ukraine war, because it mediated, as you remember, it has interest on both sides. So Turkey will be used.
Says the proud Turkish man. We are the center of the universe.
Well, we are actually.
Yeah. Well, you certainly
look at
an
the
important
map, geopolitical map. Amen. In that regard. It's just in the middle.
Absolutely. Yes. Yeah. It is, and we would like to see how all of this plays out, and what the decision OPEC Plus will make tomorrow in the more immediate future. The overwhelming view in this room is extend cuts for 3 months. Let's see, Prince Abdulaziz bin Salman, the head of the OPEC group and Saudi Arabia's energy minister, has been known to like to surprise the market a little bit. Has he got a surprise that will shake up all of this consensus? We will see. Until then, Andy Lavin, thank you so much. As always, Mehmet and Ali Al-Riyami, and we look forward to seeing you all in Dubai next week. And we'll see where the rest of this week goes in the interim. Thanks, guys. Have a great day. Bye-bye.
Thank you all.
Thank you very much. Bye-bye, guys. See you guys.
Bye-bye.
Bye-bye.